Hello, everyone. Welcome to CEO Declassified podcast. We have a very special guest today, Brooke Busi, who is a certified financial educator, and she's going to share all the juicy details on how you can get started investing for your future, even if you have $50 or $100. So I'm so excited to have Brooke today. Brooke, welcome to the show.
Thank you for having me. I'm excited to be here and to talk about money, my favorite.
Of course, of course. Such an exciting topic. And I know some people even consider that a taboo. A lot of people don't like talking about it. So I want you to take us back and take us back to when you first started, because I know you've been a teacher, you've been an educator. So was there a moment that made you realize that you wanted to teach people about money? What was that turning point?
Well, I was always interested in money and investing myself, even as a kid. When I used to babysit a lot in high school, and I saved up my money from babysitting, and I had a family member who told me that I should be investing the money, but I really didn't know how. So I was trying throughout all of high school, college to understand investing, understand money, because my parents they had retirement accounts and things with their jobs, but they weren't experts in it by any means. And they sort of surpassed being able to answer my questions by the time I was 16. My questions were kind of over their knowledge base, so I really had to teach myself. And after college, I felt I was starting to feel really confident about these things. I would talk about money with the people around me, and I noticed that they didn't feel so confident. A lot of my friends didn't really want to talk about it. They were nervous about it. So I kind of helped them figure out and become more comfortable with money and helped guide them through the journey that I had to take myself through. And I just found that I had a knack for it. I really enjoyed helping people with a topic that can seem really uncomfortable. I love teaching, and it just felt like a topic that when I do teach it to people and they get the hang of it, it impacts them. It impacts their life, their peace, their ability to kind of do what they want with their money and their life. And so I guess because of my own journey through it, I decided to go ahead and teach others.
That's amazing. And yeah, I know it's scary for a lot of people to even think about investing because either it's, you're a business owner, so you really have that active income. Like a lot of the audience of the podcast are service providers, coaches. So some people are, hustling to bring in the money and the income. So what kind of patterns do you see over and over again for beginner investors? Or what are some of the mistakes that people
That's
are making?
That's a great question. So one mistake I would say is trying to get rich quick, because everybody is trying to buy, well, not everybody, but a lot of people see post about, Bitcoin or a new stock, and oh, I'm gonna buy that. I'm gonna go on my Robinhood app and I'm gonna invest all this money and try to double my money in a day, a week, a month, even a year. It's very difficult to do that. That is not the type of investing that I teach. I teach long-term investing, which is a little bit less risk, and it's more of the long-term steady growth for things like setting yourself up for retirement later on, or even an early retirement. And so buying one single stock that you heard about on Instagram is not really the way that I would necessarily go about it. And I think that's a big mistake where a lot of people lose a lot of money. Whereas there's this thing called index funds where you can buy a fund that has a whole bunch of different stocks, and it might have a little bit slower growth, but it's going to be more consistent over time. And it's not like, oh, tomorrow it's going to be doubled and then the next day you're going to have nothing. It's more of a reliable investment in an index fund that has a whole bunch of different stocks in it. And of course, nothing with investing is guaranteed, but it's just something that's been researched, it's been studied for much longer, as opposed to, like I said, a stock that goes up today and then crashes tomorrow.
Yeah, I see so many different ads with, I call them like the marketing bros, or the bros in general, who teach, the forex investing
Yeah.
and the crypto. I know it's such a big buzzword, and there's so many people see, the Lambos and Ferraris, and they just have that, I guess, like shiny object syndrome, and it's just not sustainable, and it's so risky. Personally, I've never been attracted, first of all, to that kind of marketing. I've always preferred, the slow, sustainable, and steady wins the race. Um, And I know you predominantly work with women, right?
Yes.
Because I know when you think investing, and I feel like there's so many men, like it's such a male dominated field. And you working with women, for me personally, it's such a breath of fresh air because, again, women always relate with women way better, in my opinion. So, why do you think so many women feel behind with money and when it comes to investing as well?
I think that it ties in really well to the story that I was mentioning. Like when I graduated college, the people who was talking about with money, my friends were women, young women, 22 years old. And I can't tell you how many times I've heard a woman say, I'm so bad with money. I'm not good with money. I hear it, multiple times a week. Like I have no idea what I'm doing with money. And it's not like something natural born in you makes you bad with money. It's not like your genetic code says bad with money. And then when a boy is born is says good with money, it's not, that doesn't make any sense. I think that it's like the narratives that we are taught as women, like you said, it feels very taboo. I think for money can be a taboo topic for men as well, but it's just a little bit more discussed for men in circles that men are in. Like if men are going golfing or something, a lot of times there are business deals happening there, and women can do that too, but it is just more of a male dominated thing. Even the finance industry, like you said, when you picture someone in finance, most people are picturing men. And I think it's just the way that we're brought up, the culture, the pictures with the billboards of finance have men on it. It's just like not, it doesn't feel like a very welcoming space for women. So we have to work extra hard to kind of break that boundary, because all of the information is just as accessible for a woman to be able to understand and like learn it. It's just that there's this blockage where we feel like we're not welcome there.
Yeah, and there's also this thing that I hear in my culture sometimes that, oh, like women are not so good at math. Like even some of my family say that. I'm like, you don't necessarily need to know the math when it comes to the investing. Is that correct?
Yeah, and again, same thing. It's not like it's genetics about, oh, women are are worse with math. It's just that in math classes, maybe the boys feel more confident or they're called on more. Like I think it's just how we're socialized. And yes, investing is pretty basic math, and especially now there's so many online calculators that you can use. Day to day, I don't do much math. I do some addition and subtraction in my day to day. But other than that, I use online calculators to help me with all of the math. And, I teach people to do that as well because they're public. There are free ones online that you can do for you. And it does more of the more difficult math, but it's not something that you're needing to come in with like these calculus skills to be able to come in as a beginner investor.
Yeah, so what's the biggest misconception that a lot of beginners have when they just start to learn about investing? Let's say somebody comes to you for the first time, they come across your Instagram page and they're like, okay, so I would like to start investing. What's like that's maybe like the roadblock that they're having? What's the most common challenge people tell you about?
They're worried that they don't have enough money to invest, which makes sense because when we think about investing, like you said, you're seeing the picture of a man with a Lamborghini, and you're like, I never in my life will I even make enough to afford that. That's how people feel. But like you mentioned in the beginning, investing is accessible with even $1. There are lots of ways to put $1 in today. You can put in another dollar in next week, or maybe you have $10 or 50 or 100, but you don't need a lot of money to be able to invest. The only thing that I always do say is to make sure that you have some savings before you begin investing, because an emergency fund is key. If you buy investments, there is always, slight up and downs with the market. So if you need money to buy food tomorrow, but you used it to invest, then of course that like you're not going to be able to buy food and survive. So that's something to, of course, always take into account, is having some cash around for emergencies. But you don't need to have $200,000 laying around in cash before you're ready to invest. Like, if you have $2,000 cash for an emergency, great. That takes some time to build, and you can be putting $1 a month into your investments until you're ready to put a little bit more.
Yeah, and what kind of investments are you teaching when you're working with your students? Because we know there's so many different things, and I feel like when we think of investments, sometimes people immediately jump into real estate, which that involves, larger sums of money. I know you've mentioned index funds. Is that the main like investment strategy that you're teaching?
Yes, definitely index funds or index ETFs, but just for to make it simple, so what an index fund is for if some listeners don't know, it's basically like a basket of a whole bunch of different funds. So as I mentioned before, there are some people online that are promoting, day trading and putting a bunch of money into this one single stock, and then it's going to go up, and we're going to sell it, whatever. An index fund is more like a basket with a whole bunch of different funds in it, and it actually tracks a benchmark or like a market index. So it's following the trends of how you can buy like a US index fund, you could buy an international, and it's following the trends of how different companies are doing. And when companies are doing well, they're staying inside of the index. And when they're not doing well, they drop out of the index. So there's nothing really actively that a person like you or I needs to do. We can put our dollar into the index fund. That dollar gets split into hundreds, sometimes thousands of different companies, 1 cent each. And if you decide to put $10, maybe a little bit more into each. So it is split in a certain percentage into each company. And then it just kind of tracks with the growth of these companies and how they're doing. And if the overall trend is upward, which is what it tends to be for an index fund, then you just make money. Slow and steadily, though.
Yeah, yeah. I feel like that's the goal of this conversation is if we're talking about slow and steady wins the race rather than just dropping a bunch of money, being super anxious about it, and then, having that fear of losing it all. Because I know that's usually the biggest fear of all the people who start investing.
Yes, and your money can still grow and gain a lot of traction in something like an index fund. So for a top U.S. index fund, for example, the S&P 500, the growth in the past performance has been your money does double every 7 years in one of those funds. So if I put in $100, it's $200 in 7 years, and that starts to grow a lot if you leave it in over time and you get to retirement age. So I don't want to make it seem like it's not worthwhile because it still can be very big. If you put 5,000 in and then in 7 years it's 10,000 and then in 7 more years it's 20,000, you didn't do anything. You didn't have to work for that money. So it's still definitely a valuable asset. But like I said, it's much slower than saying, oh, tomorrow I'm going to double it. And then, the next day it's worth nothing.
Yeah, yeah, exactly. And I know you touched one thing on the budgeting, so I wanted to ask you about that. Of course, you have to be smart with your money. You have to make sure that your, initial needs are met before you invest anything. So, how do you recommend people start budgeting for their goals without necessarily feeling restricted or punished?
I love that question. So that's a huge thing that I promote and that I talk about in my programs. I have something that I've created. It's called the Freedom Budget, and it's sort of like a reverse budget. So normally, and correct me if I'm wrong, but most people come to me saying, "Oh, I really want to invest. I really want to save, but at the end of the month, there's not enough money left after I've paid for my bills. I pay my credit card bill. There's only." I'm in the negative actually. So they're not able to put money towards those things. So the reverse budgeting, and I call it the freedom budget, is where we think about our goals ahead of time and we decide how much we'd like to allocate to those goals. And we set it up so that it's automatically going into those places. And then the remainder of the money is what's left for you to spend. So instead of waiting to do our goals at the end of the month, we do them first with the first money that comes in. And this is a concept. There's an author that I like named David Bach, and he popularized this concept called pay yourself first, where you're putting the money into your goals, you're putting the money into your investments before you go ahead and spend it on everything else. And so the way that works is you can start really small. So you can decide, okay, I want to put $100 a month into my savings account. You automate from your paycheck or whatever way that you get paid on a certain day of the month. $100 is always going to go into my savings. And then my investments, $10, say, starting with that. And then if you were able to do that, next month you can try for $150 and $20 or something like that. And that way you're getting used to putting more and more of your money towards these things that are non-negotiable. And then the remainder of the money is what you pay for things with. And so if there's money left over, or there should be money left over to pay important bills like your housing expense, groceries, but there might not be money left over to buy a new pair of shoes. And it makes you think about like, do I need this? Or maybe can I save it to next month? And it's just helping you kind of prioritize your goals, because even though buying a new pair of shoes is an awesome thing, it's something that should maybe give you a little bit more pause and require a little bit more thought, which is why we put it at the end instead of at the beginning.
That's such a powerful way to think of investing, and I love the concept of paying yourself first and being more responsible rather than, buying the shoes or the handbags or whatever else that can wait, and rather investing in your future and making sure that, you are prioritizing your future rather than the instant gratification of like, oh, I just got, myself amazing shoes. Well, shoes are not gonna sustain in the future, right? So compared to your investments.
Yeah, and you know what? It's kind of exciting then when you do buy the pair of shoes because you know that you're like set up in all the other ways. So if you put in the money for a couple months into the savings and the investments, and then when you have enough left over to put towards those shoes, it's like, yes, I really earned this. I worked hard for it, and it feels so good because you know you checked all your other boxes that are more important to you first, rather than like an impulse buy and then you feel guilty about it and it's stressful and you feel like you can never get ahead.
Yeah, there's you've probably heard this concept on Instagram and TikTok, the girl math. So once your investments bring it back and you get the shoes are practically free.
Exactly. I love that. Girl math.
Girl mathing through the investing. So if someone has 50 to $200 to invest, so somebody comes to you, they're like, okay, I'm brand new. What's the first move you recommend to that person and why?
Yes. Okay. So the first thing that you need to do is open up an investment account. The only way that you can invest is if you have an account where you can actually access the investments to move your money into these stocks. Here in the US, I like Fidelity and Vanguard are two really nice options to open an account with. So you would log on, open an account just like you would open a banking account. You have to sign up for it. And then you need to transfer the money from your checking account or wherever your money is into that investment account. So $50, we transfer it from our checking account into our investment account. We've got $50 in there. And now the money is ready to be used to buy some sort of investment. So it's in the fund, it's in my Fidelity account. And a misconception here, I just want to stop to note this, is that people think that once the money is transferred into my investment account, I have a Fidelity account, I put my $50 in, yay, it's going to grow. That is not true. It is just sitting in there. And I've had so many clients who show me their Roth IRA. They're so excited to show me their investment account, and the money has actually never been invested. It's been put into the account, which is wonderful. That's great that you took the first step, but it's not growing. You didn't use it to buy any of those index funds. So most people don't understand that it's actually a two-step process. You have to transfer the money in to the account. Well, actually, I guess three steps. You need to open the account, transfer the money in, and then once it's in, you need to buy an investment like an index fund that I just mentioned. And there are so many of them. There is just a Fidelity example off the top of my head. There is one called FSKAX. If any listeners want to write that down, that's a total stock market index fund. So you can buy it once with your $50 and you can have shares of all these different companies. And the Vanguard equivalent is called VTSAX. And this is just a nice, easy index fund to start off with because it's got lots of funds inside of it.
Amazing. Yeah, I really hope if you're listening to this right now that you have your notebook and re-listen to the episode multiple times if you need to with all the terms. I love the step-by-step process. I really hope that every single American who's listening is going to get their account set up and get it going. So what kind of mistakes do beginners make when they first start investing small amounts?
Before I answer that question, I want to go back to what you were just saying. Just to make it clear, investing in different countries, there are different systems, different banking systems that are used, but a lot of it does function pretty similarly. So I've had clients in Belgium, Dominican Republic, New Zealand who are going through this same process and able to invest the same way. You can also buy US stocks even if you're not located in the US. So just to make that clear that even if someone who's listening is not necessarily American, you can still follow these same or very similar protocols. Type it into ChatGPT. Oh, how does this, apply for my country? You can get a basic breakdown of that. And then, not everything on ChatGPT is going to be perfect, but it's going to at least get you the ideas for how how you can get started in following those same exact steps wherever you are. So I just wanted to make that clear that these steps can be accessed by people all over the world. It's not only Americans.
Okay, and I wanna also add one more thing for anybody who's listening. Please do not rely on ChatGPT as your financial educator because it does make mistakes. I know we're all humans. Humans also make mistakes, but if you actually want somebody reputable to work with you on this, Brooke is gonna be the human for you to work with, not just relying on ChatGPT or Claude or whichever AI you're using.
Yes, exactly. I totally agree. I think that for some basic knowledge and to kind of get your first grasp at it, AI is an amazing tool to leverage for that because it can get you broken down into like a way that you can first start to understand. But before you go and pour a whole bunch of money into something, I totally agree. Consulting with a human like me, looking, into some books and really doing your deep dive to understand before you put your money into something.
Yeah,
Disclaimer.
yeah, disclaimer. So speaking of books, do you have any recommendations for the listeners of what's a good investing book?
Yeah, so my favorite finance author, his name is David Bach. And as I was mentioning earlier, he's coined that term, pay yourself first. I believe it was him, or maybe he's just the first one that I've heard it from his books. I've read so many of his books. But he actually has a book called Smart Women Finish Rich. And I like it because it's specifically targeted for women and it talks about a lot of the things that we mentioned at the beginning of our conversation today where these aren't really the types of discussions that women are always having. So he's written the book specifically for us, which I really like. And also, what was I just going to mention? Oh, yeah. So my programs are the paid programs that I teach are video based. I also have free resources on my website. But the reason that I created the video based is because I enjoyed the book so much from David Bach and many other finance authors. But I have a lot of friends that were just not able to get through them because it can be boring for some people. So the book option is very good if you don't want to spend a lot of money and you want to learn and you have a good attention span. But the reason that I created my program in a video based way is because I know that a lot of people would prefer to actually watch tutorials and understand and listen to somebody. And also, my program does come with discussion and coaching. So, for me, the books were a great start, but sometimes you might want a little bit of both. So, I just wanted to mention that the books are a great way, a great entry point, and they may or may not be enough for some people, depending on your learning style.
Yeah, so for anybody who's visual, video programs are always the best. And yeah, like some people say, oh, nobody's buying courses these days. Yes, we do because we want to see you implement the process, show us how it's done. So yeah, I love that. Making sure that people choose whatever is best for their learning styles.
Yeah, and of course, you could do the same thing in a one-on-one coaching session, right? That would be demonstrated in a video. So either way, it's just that I agree the demonstration is kind of a nice piece that some of us want.
Yeah, yeah, of course. Okay, so let's circle the conversation a little bit over to your personal brand. So I know you've built a substantial following on Instagram and across the social media. So you've built your brand essentially about the beginner-friendly, finance for the women. What's been the hardest part of growing your brand online once you started building it?
I think consistency is difficult because with finance, there are some times of the year when people really want to get involved and get excited about getting their money right, and there are other times of the year that people aren't as interested in that. They have other things going on. So the consistency as far as with my business and my clients, filling my seats for my programs is a lot easier in January than it is, say, in December or November. And so that's been something that I've had to navigate as a business owner of figuring out like how to plan for those different ebbs and flows. And I don't know if that answers
Yeah,
your
yeah, yeah, yeah.
question.
No, consistency is a big one for everybody, and just staying with, because there's so many different responsibilities when you start building your brand. And I know you come from teaching experience, so it's kind of similar, I guess, but showing up and then having conversations online and posting content, and considering there's so much noise, I would say, when it comes to the content out there. Everybody and their dog is a content creator these days, so trying to break through that noise and being consistent with that is, yeah, that's a challenge that I see a lot of people have.
Yeah, and I try to be as authentic as possible with what I'm sharing online. Just to kind of, if I, have a certain like I have a money that I want to invest. I want to kind of like show how I'm doing it, break it down. Or, if there's a decision that I made and then I changed my mind, I try to share about that online and explain, because I think everything looks so perfect online and that can be very difficult. So I've tried as best as possible, although I still know that a lot of things that I'm talking about and the investments that I do, it may not be realistic for someone else, but I try to demonstrate, like I said, even if you have $50, even if you have $100. And I've also made some content out there for people who are trying to repay their debt, because I know that that's another big hand in hand. Some people don't feel ready to invest yet if they still have debt to pay off. So that's another kind of important piece that I've tried to tie in with my beginner friendly investing, is that if you do have debt to pay off, it's possible to be doing both at once. Or, this is the way that you might want to be strategic with it. Because I agree, there's so much information out there and a lot of it seems almost like magical, like get rich quick. And I want to try to be as authentic and realistic as possible with what I'm putting out there.
And I believe that's so key. I love that you shared that because seeing Instagram just in general, and I'm sure you see a lot of different creators, I'm sure you see different, coaches and, the advertising, and a lot of people are promising a lot for too little. And I'm like, if you've been in the industry, if you've been online on social media for, 1, 2, 5, 10 years, there's been a lot, and people have, how can I say this in the most polite way? Excuse my French. We're intolerant to bullshit, so we don't want the fluffy promises and like, oh, you're gonna make 6 figures next year. So people want more realness, especially with all the AI implementation and AI generated content and everything like this. Everybody promises so many different things. That's not sustainable. I feel like the word for the year, especially for the investors, has to be, sustainable, what you can realistically do. And you sharing that with your audience is amazing because, yeah, people want the real stuff, not just, the promise of living on an island or something like that.
Yeah, because we've gotten to the point where, maybe people have tried or purchased something in the past and you get burned by
Yeah.
that because it's not realistic. And yeah, I think with this online social media world, we've kind of learned to not trust that.
Yeah, exactly. So was there anything you had to unlearn as an educator and teacher once you started building your brand online, once you decided to teach people how to invest?
I think that I don't know if it's necessarily an unlearning, but the comparison piece I think is really big with online, well, I guess unlearning that the fact that social media is real, right? Because I thought when I was starting this, that things were realistic, and that the things that people were putting out there were true. And I think as someone who's been in the space for a little bit longer, exactly, you can sniff out the BS a little bit easier. And I've had to realize that someone posting something or sharing about something is, their journey, and it's might not be exactly what I'm going for. So trying to not compare myself to what other people are doing, other creators, and kind of stay the course of my values, and sticking to what I know to be true and what I want to, like how I want to portray the information and portray myself. So I guess the unlearning is the comparison.
Yeah, and I've always said that the only person you should be comparing yourself to is you yesterday, because today you're a better person, a better investor, and yeah, we should only look back to see how far we've come.
I love that. That's great.
So I have one more question that I want to ask you before we wrap up the episode and we share how people can connect with you. If there was one money advice that you could eliminate from the internet forever, what would that be?
Oh my gosh, that's such a good question. Just put it on a credit card. Because I think that, everybody is like, "Oh, you have to live your life, you have to treat yourself." And I think that's true to a certain extent, but I think that the whole like self-care little treat thing is out of control, because everybody is, well, not everybody, but a lot of people who come to me have been so burned by their credit cards because they wanted to, take this trip or buy this thing that they couldn't afford. So they put it on a credit card and now they are paying a 30% interest rate. Their debt is piling up so quickly that it takes a lot of effort and a lot of, you know, a pretty well thought out plan to get out from there. And if in the first place, the marketing wasn't so strong, oh, treat yourself, buy this, you could put it on a card, whatever, then people wouldn't have maybe made those choices. So I think that the advice of like, yes, living in the moment is good, but living in the moment feels good today and then it feels terrible tomorrow and next month and next year when you're trying to pay back that live in the moment choice that you made. So that's why, like I said, I mentioned with the freedom budget and putting your money to your goals first and then spending whatever's left over, because it's truly not just a free for all. Like everybody doesn't deserve everything. Everybody doesn't deserve to buy anything that they want all the time, even though for some reason that's what marketing has like taught us. Everything is treat yourself. You deserve it. This is self-care. And at some point, it's not self-care if it's completely damaging your future and your year and your mental health trying to pay it back.
Yeah, and that's such a dangerous advice that people spread out. And even in the coaching industry, I've heard this a lot over the years when coaches say, "Oh, just put it on the credit card." And I'm like, especially if it's something to treat yourself and to do the self-care. And let's say if you buy, a $2,000 trip, and then the next month you get hit with 30% interest rate and it keeps piling up, that vacation is going to be like a five or potentially six-figure damage to your future. That's insane.
Yeah, and it's like, I mean, I hope that it was great and you made those memories, but like to be honest, I don't know, is it worth it for what you're going to be having to give up later on to pay this at 30%? Maybe if you had waited a year and you had saved up and you could have paid it cash, it would have never built up in that way. So that's where I think the planning piece comes in. And it's so hard because everybody's busy and they're stressed and they don't have time to sit down and plan or they don't want to do it. But I just think that you're like running on fumes when you're just spreading yourself so thin, trying to pay this card and trying to like, because of the decisions that you're making in the moment. Like there has to be some planning and thought process when it comes to money, or else it's going to continue to get worse and worse and worse.
Exactly. I love this conversation so much. Brooke, you've shared so much incredible information with the audience. If they wanted to connect with you and take the next step in working with you, what's the best place to reach you?
So I'm on Instagram at Brook Builds Wealth. I don't know if I mentioned, but that's the name of my business. So you can find me there. I have lots of content and information. I also have a free guide that you can access. It's called the free 15-minute millionaire guide. And the purpose of that guide is to help you plan your $1 million investment plan in 15 minutes. And so I'm showing you about investing, how much you'd need to put in if you want to retire a millionaire. And I'm not saying you're going to get $1 million in 15 minutes, but I'm saying that it could be as quick as 15 minutes to sit down and actually plan for this if you want to retire later on as a millionaire, and how you can actually take the steps to set that up. So that is my free guide. And then if you actually want to work with me and reach out to do so on my website, there's a little tab. It says work with me. It's www.brookbuildswealth.com. And that is the place to look into my programs. I have both one-on-one coaching, and then I also have a small group program where it's a little bit more of the self-paced. There's some of the videos. We see each other week to week. And my whole promise is that you come in as a finance beginner and you leave as an informed investor. And throughout those 2 months of working together, I've trained you on all these topics. I've helped you set up your budget. I've helped you set up your investments. So yeah, those are some of the different options to stay in touch with me. Hopefully that's helpful.
Amazing. I'm going to leave all the links in the show notes down below for easy access. So go ahead and connect with Brooke. And Brooke, thank you so much for your time. I really appreciate your conversation. It's been absolutely amazing. Thank you so much.
Thank you so much for having me. It was wonderful. And Happy New Year.
Happy New Year.